Rivian has been quite volatile the past few weeks, and this has made many investors question their decisions. But don't worry, as today we'll decode exactly why Rivian stock might still be a good buy. But before we do that, subscribe to our channel, $1 World, for regular RIVN stock updates. In the dynamic landscape of electric vehicles, or EVs, there's a standout player that has captivated the attention of investors in recent months: Rivian Automotive. RIVN negative 0.81%. Like a bolt of lightning, the company's stock has surged forward, surmounting supply chain challenges and other obstacles to rev up its vehicle production. The result? A staggering 60% surge in the stock's value over just 3 months. Yet this dramatic ascent hit a speed bump following the release of Rivian's second quarter earnings report, triggering a 15% pullback. As the dust settles, many find themselves at a crossroads, deliberating whether this dip presents an opportune moment to dive into the world of this pioneering EV enterprise. Following a string of stumbling blocks during the initial phase of its production acceleration, Rivian appears to have adopted a new approach in its communication with investors and customers. Their journey began with the commencement of production in late 2021, but the narrative took an unexpected turn in March 2022 when the company announced a substantial price hike. This move, aimed at offsetting escalating raw material expenses and other growing costs, left pre-order holders perturbed as prices were slated to surge by as much as 20%. However, in the face of fervent backlash from reservation holders, Rivian swiftly performed a U-turn, retracting the proposed price increase. The saga continued with a course correction in the company's production volume projections the previous year. Having initially declared its ambition to manufacture 50,000 EVs in 2022, Rivian was forced to halve this figure due to teething problems associated with its startup phase and the emergence of supply chain complications. Nevertheless, it appears that Rivian has managed to steer itself back on course, with its production endeavors gaining rapid momentum. What initially seemed to be a conservative projection of 50,000 units for the beginning of 2023 has proven to be prudent. In a noteworthy shift, the company not only affirmed its commitment to this goal in its recent second quarter report, but went a step further, signaling to investors that they should anticipate the manufacturing of 52,000 vehicles this year. Intriguingly, Rivian might still be adhering to the principle of under-promising and perhaps harboring aspirations of over-delivering in its quest for success. Surpassing Wall Street's projections by around 10%, Rivian's second quarter output of nearly 14,000 vehicles sent a positive shockwave through the industry. Yet, even as the company cautiously elevates its production outlook for 2023, there's a distinct possibility that this uptick remains on the conservative side. Consider this: if Rivian were to maintain the same production pace achieved in the second quarter, its annual output for the year would effortlessly surpass 51,000 units. The trajectory becomes even more intriguing when one takes a closer look at the growth trend illustrated in the aforementioned graph. Rivian's production rate has been soaring at a remarkable pace, revealing a pattern of swift expansion. This upward momentum strongly suggests that the company might be well positioned to not only meet but potentially exceed its current estimates. As the months unfold, Rivian's ability to outpace its projections could be the catalyst that puts a smile on the faces of its eagerly watching investors. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Even though Rivian's production is regaining its momentum and appears poised to surpass current expectations for the year, the path to solidify its standing as a successful long-term enterprise and investment remains substantial. While achieving production figures of 52,000 or even 60,000 vehicles this year might spark optimism among investors and Wall Street analysts, it's important to note that such numbers won't necessarily translate into immediate profitability for Rivian. However, for investors who possess a patient outlook and a steadfast belief in Rivian's ongoing growth, the present juncture doesn't appear unfavorable for considering an investment in the company. If we consider the production rate of 60,000 vehicles with the average selling price per vehicle observed in the second quarter, Rivian's stock recently exhibited a forward price-to-sales ratio slightly above 5.0. To offer some perspective, Tesla carries a P/S ratio of about 7.0 based on its projected 2023 sales. Granted, Tesla commands a premium in this aspect compared to Rivian due to its robust financial performance. Nevertheless, Rivian's valuation doesn't appear overly inflated, particularly in the aftermath of its recent 15% dip. By the close of the second quarter, the company possessed a cash and equivalents reserve exceeding $10 billion, along with a total liquidity of $11.3 billion when accounting for its existing credit facility. However, It's worth noting that the potential for further capital raising remains if Rivian doesn't attract positive free cash flow until its anticipated fiscal year of 2027. Rivian did experience a cash outflow of about $1.6 billion in the latest quarter, yet it did indicate expectations of a slightly improved full-year adjusted earnings before interest, taxes, depreciation, and amortization or EBITDA loss compared to previous guidance. In light of these dynamics, Rivian's financial trajectory is indicating a shift towards the right direction as its production volumes continue to ascend. For those with a long-term investment horizon in the electric vehicle sector, contemplating an investment in Rivian might be an intriguing consideration. Let's look at how the stock is performing in market. On the trading day of August 20th, Rivian stock commenced trading at $20.25 and exhibited a trading range spanning from $21.17 to $20.18, with a trading volume of 42.88 million shares, surpassing the daily average of 35.2 million shares. The stock concluded the day at $20.78, reflecting a decrease of 0.81% compared to the prior day's closing value. The trajectory of the stock's price during this period was predominantly influenced by a broader market downturn. The S&P 500 index observed a decline of 1.6%, while the Nasdaq Composite Index faced a more pronounced decrease of 2.2%. Notably, Rivian stock has exhibited notable volatility in recent months, impacted by a variety of factors including fluctuations in interest rates, disruptions in the supply chain, and challenges in production timelines. Despite these hurdles, the stock has managed to maintain a moderate buy rating from analysts, rendering it an enticing prospect for investors bullish on the electric vehicle sector. Several pivotal determinants could significantly impact Rivian's stock price in the near term. First, the ongoing scale of production for its R1T pickup truck and its R1S SUV holds the potential to sway its stock performance. The company's ambitions include producing 25,000 vehicles in 2023 and an impressive 150,000 vehicles in 2024. Second, the company's financial performance remains a key factor, given its early-stage production phase and current lack of substantial revenue generation. In the first quarter of 2023, Rivian reported a net loss of $1.59 billion, reflecting the challenges inherent in its early operational stages. Lastly, the broader dynamics of the electric vehicle market, which is still relatively nascent and marked by intense competition from established automakers, could exert a notable influence on Rivian's stock trajectory. Collectively, these factors compose the intricate landscape that shapes Rivian's stock price, reflecting the ongoing interplay between market conditions, production efforts, financial results, and industry trends. On the other hand, a number of equities analysts have recently shared their insights on RIVN shares. In a research note dated August 9th, Mizuho raised their price target for Rivian Automotive from $30 to $32 and bestowed a buy rating upon the stock. Similarly, Wells Fargo and Company increased their target price from $14 to $24, maintaining an equal weight rating, while the Goldman Sachs Group upped their target from $18 to $23, accompanied by a neutral rating, both also on August 9th. On the same date, Piper Sandler raised their target from $14 to $22, maintaining a neutral rating. Finally, D.A. Davidson adjusted their target from $18 to $25, upholding a neutral rating on August 10th. In total, one analyst rated the stock as a sell, 7 as hold, and 12 as buy. As per MarketBeat, the consensus rating presently stands at moderate buy with an average price target of $29.10. The prevailing sentiment across online discussions and among stakeholders indicates a prevailing bullish outlook on Rivian's stock. The consensus appears to lean towards optimism, with many expressing confidence in the company's potential for growth and success. However, as is common in any market discourse, there exists a minority faction who hold differing opinions and are more cautious about the stock's trajectory. While the prevailing sentiment seems to be one of positivity, it's important to note that divergent viewpoints are a natural component of financial discussions and decision-making. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.